Good afternoon and welcome to BizTech Asia's Asian Midday Market Watch. I'm Jeffery Halley and today with me is my co-host Brian Fernandez, and our guest today on the 19th of January is Kelvin Wong, Senior Markets Analyst at Oanda. Kelvin, good afternoon.
Hey, hi, good afternoon to you, Jeff, and happy Friday, and as well as to Brian. Good to see you guys again.
Yeah, good to see you.
So before we get into the questions for Kelvin, let's take a look around Asia at how local stock markets are performing.
All right, we'll start close to home for me, where in Malaysia the KLCI is up 0.26%, Shanghai is down 0.38%, the ASX All Ordinaries is up just under 1% at 0.97%, the Nikkei is up 1.1%. The Hang Seng is up 0.22%. Rounding up the numbers, we've got the Kospi, which is up 0.79%. Kelvin, your view on market performance in the first half of the day?
Well, I would say that this performance so far is rather positive. Taken on the back of the fact over here is that we do have a kind of a resurgence of the bullish tone back into the US stock market. But that's more concentrated on the firm industrial specific, we call it a factor rather than a macro factor. Why do I say so? Because if you look at the macro factor at this point in time, easing liquidity conditions seems to be taking a backseat right now, especially with the 10-year US Treasury yield back above 4.06%, which is above the 200-day moving average. So as of yesterday, at the close of US session, it managed to rally further at 4.13%. So that's actually a bit of we call it a pullback of that easing liquidity condition that was in place since October to December last year. And on top of this, talk about that firm sector-based specific, we call it positive news flow up from Apple, because Apple, we do have a positive upgrade from one of the sell-side Wall Street broker, I think it's Bank of America. And also we do have from a semiconductor perspective, was TSMC results was actually came in better than expected in terms of yes, they do have a decline in Q4 profit, but that was not as drastic as what market is expecting. But most importantly over here is that the management actually issued rather rosy back to positive revenue growth year on year for the entire year of 2024. That's actually riding on the demand for chips related to AI, we call it a perspective. So we do have a bit of AI optimism back in the market yesterday, especially on those US-related semiconductor stocks. So that's actually driving this ongoing positive spillover impact towards the Asia markets as we are speaking right now.
Just can't keep a good bull market down. Kelvin, this morning we saw Japanese inflation fall to 2.6% year on year. Can you just talk about its impact on dollar yen, if any?
Sure. So if you look at the current situation right now over here is that, yes, we do see a bit of cooling off of the inflationary growth trend in Japan. And in fact, it's in the rest of the world. So what's interesting over here is, yes, it's actually supporting also the ongoing short-term bullish bias for the dollar yen. So if you look at the dollar yen now, it's actually trading above that open up the chart, dollar yen. So dollar yen now is actually still trading above that 147 figure level. So if you look at based on the 5-day rolling performance against the dollar yen now is actually the dollar is actually the strongest performing currency against the Japanese yen. But that actually market participants were going to be a bit more cautious on this ongoing we call it bullish bid on the dollar yen. Because right now we are now approaching a kind of a very key short-term resistance level, which is at the 1490-30 level. And not forgetting next week we do have the Bank of Japan as well. So before I talk about the Bank of Japan, I want to highlight a bit about that inflation data out from Japan today. So yes, we did see a more deceleration of growth slowdown in the headline inflation. But if you look at the inflation that Bank of Japan is monitoring is the core inflation, which is excluding fresh food and energy. So the core inflation actually came down a bit, just a tad bit. So the core inflation actually stood at for the December month. Let me immediately highlight the chart again. Yeah, it actually came in at 3.7%. So that's only slightly 1% basis point downtick from 3.8% year on year in November. And you look at 3.7% year-on-year in December, it's actually close 14 consecutive months that is above BOJ target of 2%. So it seems to us that there is actually a higher chance right now that Japan itself may start to actually escape from that sticky deflationary environment that is being persist for the last 15 or 20 years or so. But more will be starts to actually market participants will get a feel or guidance from Bank of Japan next week, especially in the last few days, about 1 to 2 weeks ago, we see a lot of ex-Japan Bank of Japan officials urging Bank of Japan to actually start to think about normalizing their short-term negative interest rate. That means a shift away from short-term negative interest rate, given that the economic environment right now is ripe for that situation.
Now, Kelvin, I want to take ask you about a broader view. This week has been this is Friday. It's been an incredibly volatile week. What's
Yes.
causing this volatility?
Yeah, because at the start of this week, this there's actually two aspects of it. One aspect is up from major central bank officials, as from US as well as from ECB. They actually made a couple of speeches at Davos, because right now there is an ongoing World Economic Forum. Most of them actually are trying to actually tone down the current dovish expectation that's being priced in on the Fed dovish pivot, as well as the rest of other central bank like ECB. So market participants are looking at a very high chance of the first rate cut to come in March this year. So initially, at the start of this year, that means about 2.5 weeks ago, the Fed funds rate, based on the CME Fed Watch 2, is looking about 70% chance of first Fed cut to come in March. But after a slew of this less dovish central bank Fed speak that was seen in the start of this week, this odds has started to reduce down to about 55%. So it seems to us that central bankers, especially from the Fed, they're trying to actually talk down this optimism that is being placed into the market, we call it participants' mindset right now, as inferred from the interest rate futures pricing. I
Right.
reckon, I also do reckon over here is that if market starts to get ahead in terms of this pricing of this much more extreme Fed dovish pivot, it may cause the Fed to actually much harder time to actually implement their interest rate cut. We call it a cycle.
Great stuff. Kelvin, thanks so much for your insights today. We've been speaking to Kelvin Wong, Senior Market Analyst at Oanda, on BizTech's Asian Midday Market Watch. I'm Jeffery Halley.
And I'm Brian Fernandez.
And this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. You'll also see it on our syndication partners, TV stations, radio stations, and websites. Thanks so much for tuning in today.